Hello friends, good week. How are you today? This is the weekly review for 20 of January 2013. Time is going fast, isn't it? I just remember the 1st of January. Now we're on 20 already. So this is the weekly review and it's going to be very interesting week. So let's get well prepared for the potential trades we might have and the opportunities we might get soon. The first thing, of course, fundamentally it's going to be very interesting, and let me share with you why. Well, first we have the Bank of Japan meeting tomorrow on Monday. The speculations are talking about clear level for the inflation, which means they plan to devalue the yen more and more. When I say they, of course, I mean for the government and the central bank, the Bank of Japan. The other speculations are talking about unlimited quantitative easing, exactly like Bernanke did and still does for the USA. So the thing is, how it's going to affect the yen actually. I'll discuss about that. I'll share my opinion. We also have the Eurogroup meetings regards all the situation in Europe, which I still think the euro is overvalued, and from my point of view, within several weeks, the European leaders will wake up and tell, hey, come on, the euro is overvalued. We have to intervene. Eurozone cannot really recover for long run with strong euro. Everybody knows that. The leaders know that. They start to talk, but as we know, all the leaders, they wake up until when something happens, and something will happen. So we will see. We'll watch this one. Then on Tuesday, we have the speech of Draghi, and then during Wednesday we have the WF annual meetings, and not just that. In USA, the Congress is going to vote for delaying the debt date. So this week is really interesting. How actually the traders will react and behave after the fundamental news. We all know that most of the news released in the last period just delay the crisis. We know that. Everybody know that, including the politician. But that's okay. As long as there is a room to go up, we should be there. Once the signals come, be careful, because the down move from such tops normally is very painful. So what pairs do we have? The first interesting thing I have on my list is the euro pound. I was talking about this pair that we need to get prepared, and we actually need to get prepared. And from my point of view, around 0.85. That's the level. It could be 0.84 plus, it could be 0.85 plus. Around this level we will get weekly Bollinger Band duplication, weekly 200 moving average. We will have a very strong resistance, and after the bullish divergence, this will be resistance number 1, right? This is the resistance number 2, which we're fighting right now. A bit higher, around the 0.85. This is the resistance number 3. We got a weekly Marubozu, almost not a clear Marubozu. So we go for daily chart. On daily chart, we face some interesting scenario. We have the 0.84. 0.84 is very stiff resistance. We almost have extreme divergence. Hold on. We almost have extreme divergence. RSI is almost 80. MACD already created new high comparing to last 5-6 highs. We have Bollinger Band duplication on a daily, so we might get a stop right here. We might get small retrace down, maybe to 080, 083.50, maybe to 083.30, maybe even to 83. But in my point of view, the real retrace should start to come from 085 and higher, and that's the level I suggest to pay attention to, because from there something very bearish should come, and I do think that from this high 085 or maybe a bit higher we are going for a serious drop of 3 maybe 400 points, and who knows, maybe much more in future. Now, that's my opinion. On the 4-hour chart there is a divergence already, so I would not join the sell before 085, but if there will be some false break signs, like a break above this high and retrace and then break below the low, because we have a divergence already, so that could be a false break, could lead us for a move, well, to the levels I was talking about, right? So it could take us to 083.20, it could take us to even to 083 or maybe even a bit lower, but I would not sell that just because on this level, because we have still a room to go for extreme divergence on a daily chart, and we have still to go for resistance on weekly chart. So it's better to have patience, better to act careful and join with a good sign, and false break would be a good sign. This is the first pair. The second pair on my list will be special pair, really exotic. One of my friends shared it with me, and that's going to be pound against Danish krone. It looks like opposite to euro pound, and there's a reason for that, because the euro against the Danish krone is holding around 145, 146. The Danish government, the Danish bank say that they will hold this level exactly like the Swiss bank does against the euro, and that's why while the euro pound is going up and the euro Danish krone is holding, pound Danish krone is going down. And from my point of view, we're reaching a bottom on a weekly chart. There is a perfect support around 876. 876, that could be the level. That could be, of course, weekly Bollinger Band duplication. And if it makes to break it, then pay attention for the weekly big trend line, something like that. And something like that. And I'm talking about around 860 then. On a daily chart, there is a potential extreme divergence. So from my point of view, it's going to play, then down again. 876 could be the first retrace level to the trend line or so. Attempt like that. Okay. And if it makes the 860 straight, which I don't believe is going to happen, but everything could happen in such situation. If it does the 860 straight, then buy all in, from my point of view. That's how I see the things. Pound Danish krone is very, very interesting opportunity. All right, the next pair I have on my list will be the yen pairs. The next pairs, actually. As I said, the Bank of Japan will have a meeting. Now, I think that the market reacts to the speculations, and we got an up move. Of course, if it will come officially, it most likely will give some boost. And pay attention for the dollar yen. This could be the leader. This should be the leader. We are 10 weeks in a row straight up. We are on extreme divergence on the weekly chart. We are on a very, very, very stiff resistance psychologically, 90. We could make a break now and go to 92. We could make a break and go to 94. But we're reaching a clear top, and a wonderfully strong cycle is about to come. I'm talking about that for several weeks. I'm talking about that when divergence started, actually, around these levels here. When it all started, I'm talking about it from 85. And I'm still on this opinion. Whenever divergence come, and it doesn't matter what happens fundamentally, this level is going to be retested. When? On the current cycle down, which will come, or later, I have no idea. But this is the level that here around 85, 86. That's the level where the market will retrace the end. Only question is how exactly and when exactly. So, in my opinion, get ready for the sales. And after the Bank of Japan, if the speculation become real, let it go. And then after the news, 1 day, 2 days, maybe on the same day, with the first candle pattern, go and attack that. And now pay attention for a big possibility. We have a wonderful divergence here, as we can see, and we have a wonderful high here. If this high will cause a false break, which is a big possibility to happen, that could be a real sign that we are going, after this false break, we are going down. The first level we need to pay attention to is 86, 60, 80 range, which is the gap close, and then of course we have lower around the 85, potentially 85. This is the dollar yen. Of course, the same about all the yens. We are very, very, very extreme. This is the euro yen. Same story. RSI 80. The last time it happened was here, right? And we remember the strong pullback up. It came, right? So be ready. Something is about to happen soon. Now, could it push higher first? Yes. There is a stiff area around one here. This is the first one, around 121. There's a stiff area around 122.50, and there is a perfectly strong area around 127. There is one early around 124, 123, 124 as well, but 127 is killer area. Could it come there before the crash? Yes, of course it could, but it could also start already. And exactly as for the dollar yen, same for euro yen. If it makes the false break here, that's a bearish sign. And from my point of view, the final target should be that trend line, this trend line. This should be the final target. And it could go and make straight to 108, or it could go and play and play and play, take us to 110 or so within several weeks, within few months. Same about the pound yen, which is playing around a clear top. Same about the Aussie yen. Same about the CAD yen. Same about the Kiwi yen. I can go on and go on and go on. They all prepare something big. Will that start immediately? Cannot guarantee that, of course. We need to see the news from Japan. But get ready, because within several weeks something huge is about to happen. Natural ways of trading, natural cycle. Now pay attention for pound New Zealandian, which is very interesting pair. I was talking about this pair on my annual prediction. This pair can drop down, and this pair should drop down. My suggestion, go for the weekly chart and pay attention for the previous low around 186. There is one early around 188. Pay attention for both. It could go and make a clear stop here and a false break and then fly it up all the way, or it could go and make the 186 or even create new low. But from the bottoms we are about to have very interesting buy opportunity, most likely. I want to see the 186 or lower. I'm not sure at all it will manage to break the 188. And if it does not break the 188 and make a false break there, that could be a buy opportunity. Buy opportunity back to daily 20 MA. And who knows, maybe back to the 200 moving average. Euro Canadian is the next pair I have on my list, and my suggestion, it's a bit early now, but mark yourself the 134. Around 134 the daily divergence and the weekly divergence could meet. There is a stiff resistance, and around 134 we should be looking, maybe of course when I say around 134, it could be 133.50, it could be 135. It's the same for this level. Look for a bearish stop there with a bearish candle pattern with MACD change its slope down, and this will be the trigger for a sell that could take us all the way, if you pay attention, back to the down side, down bend, down boundary of this expanded channel. So Euro Canadian it is. Then next pair I have on my list is the pound dollar, of course, breaking below the 200 moving average, breaking below the RSI support. MACD so bearish, and it seems we're ready for falling knife. And from my point of view, the break of this trend line should lead us for, hold on, let me find that, should lead us all the way to the trend line, at least weekly trend line. And I am talking about, if we measure all the lows, I'm talking about something like 156.40 or so, maybe even lower. If it manages to break this one down, it's going to be very, very powerful. So every retrace up, like to 159 or 159.50 or 160, every retrace up should be considered as a sell opportunity. We might go from here for a weekly duplication, which is around 156.30 approximately. Every retrace up on the 4-hour charts, we can see almost oversold on RSI. On the 1-hour chart, we might get a bullish divergence soon, which will retrace it. And every retrace up should be considered as sell opportunity. This is my opinion for the pound, as long as it holds below the 160. As long as it holds below the 160. That's my opinion for the pound dollar. Now a few words about the silver and the gold. Well, the silver has a bearish divergence on the 4-hour chart. The silver has bearish hidden divergence on the daily chart. The silver has trend line and resistances. So from my point of view, the silver is ready for a sell, unless it makes the break above 32.50, and then we most likely will get a push to 33, 33.50, or even higher. So the way to join the silver is to take this trend line and break below this trend line and the support. There is a beautiful support here around the 31.50. If it manages to break the trend line and the support, we are going down. How deep? Well, for 31 first of all, and then most likely we are going back to 30, 20, 30. This is my opinion for the silver, unless, as I said, it breaks above 32.50, which could be very bullish sign for future. But about the gold, I prefer to stay neutral. I don't really understand the price action right now, and too much zigzagging from my point of view, and I prefer to stay away. Pay attention for the oil. 20 candles a ride. Resistance. I'm still in the opinion that the oil could surprise and go back to 98 or even 100 with all the inflation coming in USA. But, and that's a big but, if the oil successfully breaks this trend line, I would say even 94 level, then it could be very, very bearish sign for the oil to go. And remember, there is a gap that still was not closed, around 88.40. So that could be this dip. This could be this dip. If it pushed higher, then follow the daily divergence, follow the daily next bearish candle, and the next place where MACD will turn bearish, of course. Swiss index pay attention for this interesting index. I was talking about that several times. Every high that should be created is a sell opportunity, and right now on a daily chart there is extreme divergence. There's extreme divergence, so we might go now back to the daily 20 MA, then potentially go back to the gap close, and if the crisis begins during end of January and beginning of February, this is going to be interesting. That could be the beginning of something very, very deep. For the US indices, as for now, I don't have opinion, even though I keep saying that every new high that could be created and might be created will be fake. I don't believe these highs, and I don't believe that only because the monthly monster divergence forming. Whenever the time comes, it all will drop like a domino, and it's clear. The Nasdaq head and shoulders is very scary, so we will follow that. Now a very interesting stock, and I'm talking about Apple. Pay attention for Apple. Very interesting wedge is forming. Apple is about to share their reports this week, and if we make a break below the last low, we are going for 420 or 430, 420, 430 most likely, or maybe even 380, which will provide an all-in buy. Unless it breaks up and closes above 515 or maybe even above 525, that should open the doors for the stock moving all the way back to 590 or even 620. Pay attention for that. Very interesting wedge. 1, 2, 3, 4, 5 spots already. Very, very sensitive and interesting stock to follow. Well, that would be all for this week. There are many, many, many things, and they're all interesting, and it seems that we are in front of many, 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 many trading opportunities. So enjoy them and make sure to be there. And thank you very much for watching this video and for dedicating the time, finding the time for that. I wish you a wonderful week, good trading, and I'll see you in the live trading room for those of you who are in. Thank you very much. Yours, Vladimir.